How's it going all? In this video, we're talking about some of the best high yield savings accounts and products for 2023. A lot of these will earn you over 5% APY, and many of these also come with some amazing sign-up bonuses. So without further ado, let's dive right in. And starting off with number one is Discover Bank. They're offering 4.3% APY with no opening deposit and no monthly fees. Now this interest rate is pretty standard across online-only banks, but Discover also offers a cash bonus with the promo code SAVE923D3. Now, if you have $15,000 in total deposits within the first 30 days, you'll earn a $150 cash bonus. Now, if you deposit $25,000 or more, that bonus increases to $200. So if you are interested in getting a really good savings rate, as well as a couple $100 more in sign-up bonuses, Discover is a very solid pickup. Plus, they offer great customer service, so you're definitely in some really good hands there. And coming in at number two is Marcus by Goldman Sachs. They offer a little bit more at 4.4% APY. And similar to Discover, they have no monthly fees or balance requirements. They also have same-day transfers of up to $100,000, which is a pretty good perk for people who carry a bit more cash. Now, what makes Marcus especially strong is that they offer a 1% referral bonus. When you sign up via a referral link or a friend or family member signs up via yours, you can now earn 5.4% APY for the next 3 months. And that's a very high yield and is one of the best options on the market today, especially for higher net worth individuals. But perhaps the best one is number three, and that is Betterment. They offer a high yield cash account with 4.75% APY. Even better, they're also running a new customer sign-up bonus program where when you open your first account and make a qualifying deposit, you can actually get an additional 0.75% APY for the remainder of 2023. And this means that you'll be earning 5.5% APY until 2024, which is likely one of the highest FDIC insured products out there. But although 5.5% is insanely high, one of the most important things to note is that Betterment itself is not a bank. Instead, the cash is held within partner banks to earn that high yield. Now, this allows investors to carry up to $2 million in FDIC insurance through their partner banks, which is a pretty big perk. However, it is a bit more complicated compared to a national bank like Discover or Marcus by Goldman Sachs. Now, if you just want a no-frills, flat, high-interest rate instead, the Upgrade Premier Savings Account might be the best fit for you. They offer a flat 5.07% APY on balances of just $1,000 or more. There's no monthly fees and no hoops to jump through to earn those extra yields. They just offer a very simple, flat, high-interest rate. So if you're looking to simplify your finances, Upgrade could be a really solid choice. And coming in at number five is Raisin, otherwise known as SaveBetter. This is a popular third-party platform that allows investors to deposit money with 40 different FDIC-insured banks and NCUA-insured credit unions. These typically include smaller regional banks, which sometimes offer very high interest rates. For example, there are many different banks and credit unions offering up to 5.26% APY. That's a very attractive yield for a lot of investors, and I'd imagine that it'd be a strong pickup for many people. That said, because it is a third-party platform that primarily works with smaller institutions, I would really suggest performing some due diligence to make sure that the bank or credit union that you're partnering with is in a healthy state. Banks are getting hit with tighter regulation these days, which generally impacts regional institutions the most. And one could argue that higher yields is not really worth the additional risk compared to a diversified bank like Discover or Marcus by Goldman Sachs. However, if you do have an opinion on this matter, please drop it down below. I'd love to learn a little bit more and about your experiences with Raisin. Otherwise, this platform could be worth looking into, provided you do some additional research. But if you are a big fan of smaller institutions, your local credit union could be a really good pickup. These tend to offer some of the highest rates on the market today. For example, for California residents, BluPeak Credit Union could be a very strong choice. they offer a preferred savings account with 5.33% APY. Now, to be a member, you can qualify if you live in certain counties, are a state employee, or studied at a University of California campus. And to be honest, a lot of people can qualify for this credit union. They also offer up to $300 in sign-up bonuses, with $250 being easily accessible for those of you opening just a high-yield savings account and keeping it open for just 1 year. They also have some attractive CDs like a 9-month certificate offering 5.75% APY. And all in all, they're a very solid choice for California residents and a good example that your local credit union could be the most attractive option out there. 5.33% is a really good rate and something worth looking into. And coming in at number 7 is one of my personal favorites, and that is a good 4-week Treasury bill. Instead of lending money to a bank, you can actually lend money to the US government via a Treasury bill. And in a way, they're actually safer than banks and credit unions because you're lending money directly to the US government and it's fully backed by the US Treasury. Plus, the interest you earn is exempt from both state and local taxes, making this a very attractive choice for high-income families. And what's unique about 4-week Treasury bills in particular is that your money is only locked up for 28 days. And this period is short enough where you can still pay off your monthly bills like your credit cards, insurance, and mortgage payments. You still have a lot of liquidity, but you're also earning around 5.4% APY. Now, if you factor in those tax savings, this could be upwards of over 6% tax equivalent yields for high-income families living in expensive states like California or New York. And in my opinion, I think that Treasury bills are one of the best options out there, especially for long-term savers. And the final 3 options are going to be very similar to Treasuries because they are money market funds. A lot of their money is directly invested via US Treasury bills or bank CD products. And while they are not FDIC insured, they are SIPC insured and highly regulated by the SEC. Money market funds from large institutions and brokers tend to be some of the safest cash investments out there, similar in risk to FDIC insured banks. And the first one to highlight is Fidelity's Treasury Money Market Fund, ticker symbol FZFXX. Their 7-day yield as of August 2023 was 5.11% APY. Now, this is a variable interest rate that goes up and down with the market, but the cash payout is very likely to be around 5.25% APY for the month of September. They have interest rate payments at the end of each month, making them an absolute compound interest machine. And what makes Fidelity especially attractive for newer investors is their $100 cash bonus promotion. When you open a Fidelity account and deposit at least $50, you'll earn $100 in cash, no questions asked. And this is probably the best option out there for college students or people just learning about investing who might not have that much capital. So if you are a beginner and just want a really solid interest rate, a Fidelity money market fund could be one of the best options out there. 5% yields and a $100 bonus is really hard to beat. Another very good broker is Charles Schwab. The Schwab Value Advantage Money Fund, ticker symbol SWVXX, has a 7-day yield of 5.23% APY. And this is slightly higher than Fidelity, but for all intents and purposes, they're pretty much the same. What makes Charles Schwab a little bit better for higher net worth individuals is that they also run up to $1,000 in referral bonuses. Specifically, if you open an account with over $25,000, you can earn a $100 cash bonus. If you have at least $50K, that bonus increases to $300. Now, if you deposit 6 figures, you can earn a $500 bonus, and if you can deposit $500,000 or more, that's a $1,000 cash bonus. So if you are a higher net worth individual, Charles Schwab would be my personal pickup because they do offer a bigger cash bonus and a slightly higher interest rate. And finally, at number 10, we have the king, and that is the Vanguard Federal Money Market Fund, ticker symbol VMFXX. This is perhaps the most popular money market fund for most retail investors with a 7-day compound yield of 5.41% APY. And if you're looking for one of the highest rates out there, this would be my personal pick. However, the only downside with Vanguard is that they don't offer many referral programs or sign-up bonuses. So while Fidelity and Charles Schwab have lower yields, the cash bonuses arguably make a bigger impact than the additional 0.2% APY. But if you are a set it and forget it type of investor and just want a simple high yield product, you can't really go wrong with the Vanguard Money Market Fund. And with 5.41% rates that are still increasing each month, VMFXX is one of the best options out there. And there you have it. These are 10 of the best high yield products on the market today. As always, I'd love to hear about your thoughts and which banks you enjoy using the most. Have a great rest of your day, and I'll see you in the next one. Take care.